going to sell at this point, for example, and then put a stop back up here. The swing guy who gets in early is going to use the swing top as his exit. Okay? Always have your exit first and then find out where you want to enter. If you're trading for a swing, then you want to get the last swing where the trend is going to change back to up if it went back through it. If you're trading for a breakout, then you want to keep it real tight and just look for momentum and any shift in direction. So how you trade the market and how you view risk reward or how much size you want to put on, that all depends on what type of trader, swing trader or breakout trader. Okay, and that's where you would use the emerging, or you would use completed patterns. Okay, I hope that answers your question there. All right, another question is how can you tell when a breakout occurs in equity trading is a fake or a true one? Well, number one, if you have an area identified for a particular breakout, let's go to, let me shift here. I have another screen here. Let's see if, let me see if I can find an equity here. Let's look at an Australian equity. All right, first of all, you got to know the characteristics of the market you're trading. If you are trading a market that's thinly traded, in other words, after a while when you start, if you go in there and say, I'm going to trade a stock that has 1 million shares or 2 million shares per day average, okay, I'm going to trade a stock or an equity that moves $1 per day. Let's assume you did that. All right, so you're working with that core. If you learn to trade that particular stock, you get a sense of what's going on in the market. You can put it into an indicator. In other words, you may want to say, you know what, I'll let the first half hour go by, all right, or the first 15 minutes. And maybe you accumulate data that shows you what an average range is in the first 15 minutes, what average volume is, okay? So if you have an average or a normal day or above average day in that first 15-minute or first hourly time frame, that should tip you off as to what kind of day you're going to have. If you have below average stats early, then that should tell you that maybe this market is not going to move like it normally does. So that's number one. So if you get a market that's going to be more aggressive, and you could tell from the opening because there's a lot of activity, then you have to assume that these breakouts aren't going to happen. Never trade thinking that they're going to try to fake you out, okay? Always trade with under the rule that a trend in motion is going to continue in motion, okay? If you are uncomfortable with that or don't believe it, then what you should really do then is just fade the breakouts all the time. If you do that all the time, then what's going to happen is you're going to get stuck one time on when it moves a lot, and then you're going to kind of learn your lesson. So I don't want to say it's 50-50 that it's going to break out or it's going to fake out, but I could say that most of the time the market breaks out, it continues in that direction. At least that's my experience. So how can you tell? Well, number one, when you get a breakout to the upside, like for example in this particular Equities CFD market, first of all, you want to go with the pattern. If you have a triangle pattern, then, as I said before, odds are that it's going to be a good breakout, okay? Because it compressed so much, now it's breaking out. Another thing you want to look at is the color, okay? If you get green and you get thickness and a long body, for example, in a market, that's usually a sign that that's buying behind it. Okay, if the full body of the candlestick is above a resistance line on an upside breakout, that's another clue. If this market has a long wick on the breakout and then comes back down, that's usually a clue that the market could reverse on you. Okay, that maybe a high frequency trading team came in, drove it up, and then drove it down. I'll try to find somewhere in there. If I do this webinar again, I'll make sure I have wicks in there. All right, the other thing is when you look for these breakouts is you want to look at if that first bar is clean breakout, you want to look at that second one. You want to make sure that it's not a candlestick pattern that's changing the direction, but maybe you get one like red, which might mean it might change the momentum, but this pattern here doesn't really mean it's like a spinning top pattern. The other thing is, if you are skilled and if you are advanced in trading, then look at the time and sales indicator on your chart program, on your platform. Look at the bids and offers, okay? Because remember, what happens on a breakout is this. The other thing you want to look at is, are we crossing a previous top? Besides the trend line, you want to look to the left and see, is there something in the way? Is there anything in the way that could stop this particular rally? All right, let me find another market. Find another equity here. Hold on. Let's see what we got. Do I have New York? Yeah, CF New York. If I can come up with something in New York. Just trying to blow this one up. There we go. All right, if you are trading and you can look at time and sales and you see that there's bids coming in on these breakouts. Bids mean buyers. There's buyers in there. And again, that's a term that's relative. If you're observing this manually and you know your equity that you trade or your shares that you trade typically has 2,500 shares, 2,000 shares on the bid, okay? That's the buy side. If all of a sudden you see 5,000 on the bid or 10,000, or you start to see on the time and sales screen that there's 500 shares, 1,000 share orders going in, then that tells you there's a strong buyer in the market. Again, this may be new stuff to the rookie, but to the new trader, but to an advanced trader, this is what the high frequency traders have programmed into their packages, okay? This is what you can look at. It's available with every chart platform that you have. You can look at time and sales, and you can look at the level 2. You know, you can look at the bids and offers. So if there's a strong bid on a breakout, then it tends to be a good breakout. The other thing is, again, look to the left to see if you're crossing anything. Okay? Now, this may be a clean breakout through this down sloping resistance line, but remember now you still have a horizontal line coming in here, and you have another horizontal line coming in here. So if it does hesitate, you still have barriers that it has to get through. Okay? Now, the other thing is, what happens on a fake out? What happens on a fake out is that stops get hit and there's no buying coming in. It's just traders coming out. It's guys that went short who got knocked out. That's what made the market go up. They ran to get out of the market, and they made the market go up. So rather than putting something in the market, they took it out. And so you have to have that sense as to is the market going up or is it stops getting hit. One clue may be watch the index, okay, whatever index, S&P, Nifty 50, the Australian 200, whatever the CFD is. If the index is moving up, then you want to trade the stock in the direction. It's kind of like the dog and the tail, okay? Sometimes you're going to get stock in the news, and sometimes it's going to move different direction than the index. But if you think you're going to get a breakout in a stock or an equity market, then you can load up for a buy, okay? But only buy it when the index starts to break out. You know, that's how a lot of traders trade here, is they wait for confirmation from an index, okay? So that's one thing that another trader can do. So to summarize it, make sure you have green. Watch to see if you get a clean breakout. Remember that on these good moves, that old tops become new bottoms. So if it starts to break out and then it comes back and it retests the breakout point, either a horizontal support level or a this diagonal trend line, remember that retests are allowed. If it falls back under the retest point, then you know you're wrong. You have to bail out. By all means, like I said, if you are wrong on this breakout, don't flip back to this low as your stop, because now you're going to screw up your risk-reward ratio, okay? If you're trading a breakout, you want to keep it tight. You want to maybe go back 2 bars, or you can go back to a momentum type stop, like, for example, if the market turns down or turns red, you want out. Or you can look at where it broke out and say if it went back below it, you're wrong. Because, again, if it's a good buy, somebody's going to come in to defend the position, you know, a breakout or size coming in on the bid, and they're going to try to push it higher. So those are kind of things you want to look at. Let's see if we got another question here. How to identify a long pin bar and a short pin bar? I'm a beginner. You mean, okay, pin bars, I assume, are candlesticks. Well, again, without going into the names of the candlesticks, because this isn't a candlestick webinar, I look at, you know, the size, the relative size of this. I mean, obviously, this is long, so this has to be strong buying. And, you know, I'm sorry if I'm not getting specific with you, but there are books out there that will tell you what these mean, okay? And they mean more when they occur inside particular areas. For example, if you're getting a breakout, you want to look for a particular bullish candlestick. And if you are doing if you're looking for something that indicates a bottom on a candlestick, then you want to look to make sure that it occurs in a zone. Now, I want to mention something about an inverse head and shoulders pattern. All right, this is a shoulder, this is a head, and this is a shoulder. Inverse patterns, okay, are always reversal patterns, okay? And they always indicate that the market could be bottoming, an inverse head and shoulders. It's a regular head and shoulders pattern is one that typically will always indicate that it's identifying a top, and it's also always a reversal too. So always keep that in mind, that inverse patterns tend to go with bottoms. They do go with bottoms. Head and shoulders go with tops. All right, keep that in mind. Do I have to reload the page manually, or will patterns update? Patterns should update. Now, when you see when this little button, this little orange stick goes on, because we're hitting the, gosh, we're almost done. We're hitting this, the half-hour mark for the U.S. markets, so it's possible that if we may get some fresh signals, but it's updating all the time. You don't have to refresh. You'll especially want to see when these alerts go off, new patterns found. That's key. I'll go into look at the Fibonacci. So it doesn't look like, there we go. So it tells me that there's a new pattern to be found here, okay, in this, and it looks like 8 a.m. Central Time, my time. There was a Stocks 50 pattern emerging. So what this is telling me, like, this is a complex Gartley pattern. When you're working with Fibonacci's on the emerging, it gives you an idea of where it's going to go in terms of price and time. Okay? So that's, if you are a trader that likes to look ahead, I'm one of the guys that suggested, for example, on these chart patterns, and the good fellows at Autochartist accommodated me, is that I like to see extensions out, and so this is good because I am a look-forward trader, okay? If you use moving averages, for example, everything is up to this point. It's a lagging indicator. But those types of traders like moving averages because It's like a security blanket. They can see where it's at, and it's real tight to where the market is. But they don't know where that moving average is going to go. When you trade trend lines or Gann angles, I'm a Gann guy, okay? I want to see an extension because I want to get a look forward, okay? When you're doing Fibonacci's, Autochartist Fibonacci patterns, they're always giving you a look forward, okay? So when you go into emerging, you have this look forward. Where can it go, and what time can it go? That's what price and time is. Price and time is Gann. Price and time is Elliott wave or Fibonacci patterns. Just keep that in mind because you may not want to know where the market's going to go. All right, and here's another one, an emerging pattern on the Japanese 225 CFD. You can see the market's looking for, if the market continues on this path, it should hit this level during this time frame. That's the forecast. After it hits here, it's expected to bounce back up to here. So those are the forecasts. How do you know you're wrong? Well, if this is point C, if it goes through this, you're wrong. Okay? Very simple exit and entry strategy. Okay? If you're looking for a completed pattern, that means that the target was already reached and now you're looking for the retracement. What's good about this is two choices. You can see that you have a trend and the trend is up. You can decide when it hits point D or it's identified that you want to bail out of that uptrend and you want to wait for a pullback into this zone before re-entering. Okay? That's for the trend trader. The counter trend trader says, I know the trend's up, but maybe something told you it's overbought. So he sees that Autochartist identifies this point D. He shorts the market looking for a quick break to the target. Remember I said when you're a trend trader, you just let it go. When you're a counter trend trader, like a short guy, you want to set up a target price because sometimes it'll break, hit one of your targets, and then go the other way. So always remember that if you're trend trading, let it go. Give it room to expand. If you're counter trend trading, you want to tighten things up and set targets. Now, as far as key levels are concerned, I'll be really fast on these two because I am running out of time. And we will have more webinars coming up in the next year. Key levels are horizontal lines in the marketplace, okay? And Autochartist, after watching activity, in this case over 71 240-minute time periods, that's a pretty long time, Autochartist says, okay, this is the line, all right? And in this case, since we're coming up through the line, Autochartist says this horizontal line is going to be a resistance line. But you know what it actually is? It's a pivot price. It means that the market can go either side of it. So as it begins to break out through this, you want to look at momentum. You want to look at average true range or volatility, and you want to see that it's like jamming a basketball. You can't, I mean, some people can, if they're tall enough, stand under the basket, jump and stuff it in. But most people got to run and then launch it. Okay? So in this case, it's popping, and then all of a sudden, small range, and then boom. Nice candlestick. The next move was fully through the breakout point and was also above the previous candidate. Now, if you want to look at other things on your platform, you want to look at average true range or that ATR. You want to see if it's expanding. You may want to look at maybe Bollinger Bands because that measures volatility also. And you want to look at just pure volatility. And you want to see that it's expanding. What other things can you look at? Look at the index. Look at the stock and make sure it's moving in the direction of the index. For fundamentals, is the stock in the news? That's another thing is when you make your list, you may want to come in early, set up stocks in the news list, you know, scan your news wires, write down stocks, create a list, and then you're going to get, and then just follow that list throughout the day. Those are the kind of things I'd recommend when you're going to trade stocks. We've got a couple of minutes for more questions. And that's about it right now. I think I've covered key levels, Fibonacci patterns, chart patterns, how to trade them. You know, gave you some suggestions on what to do. how to trade commodities will probably be another webinar, and much of the same thing. Come in the morning, know what markets are in the news. You want to know, like, for example, is it a risk-on day? Is the dollar weak? Anything priced in dollars will be strong. Crude oil, for example. If you get a weak dollar, you get strong crude oil because crude oil is priced in dollars per barrel. So if dollars are cheap, crude oil is cheap. Okay? So you got to pay attention to that game. Dollars are up and dollars are expensive, crude oil is expensive. All right? So you're going to trade commodities. You have to know on Wednesdays at 9:30 Central Time that there's a crude oil report in the U.S. What launched that big rally yesterday? Crude oil report. You have to go in to a time period when a report's going to come out and look at the pattern that's there. All right, especially with breakouts. Those reports are always tied to breakouts. So go into Autochartist that morning and watch for triangle patterns, because triangle patterns indicate breakouts. So if you can combine the two, a triangle pattern with the report time, then that'll give you a benefit. That's how you want to look at commodities. With the current euro situation, what kind of equities do you think we can invest in? I can't give investment advice. I'm sorry there, Sanderson. But you want to remember that look at it in terms of what your own personal trading can handle. You know, make sure that you're trading risk capital, you're using stops. I'm just going to tell you what to do as far as that's concerned. As far as risk on, risk off, just kind of go the way of the move. You know, wait for those triangle patterns, wait for the breakouts, trade things that have volume, trade things that have movement per day. You don't want to get trapped in something that's thin and you can't get out. But sorry, I can't give you any investment advice. Anyway, appreciate everything. Thanks for being with me this morning. And you guys have a great holiday. Merry Christmas. Happy New Year. Everything that goes with it. And I will be back shortly after the first of the year. Keep coming to the website. Read the educational articles. I write market commentary on the indices and on equities on the weekends. Read my stuff because I do put educational things in there. Okay, I explain how indicators work. Okay, I don't write a fundamental story. I'm not trying to predict the market or anything. I write almost specifically to tell you how to use Autochartist and improve as a trader and a user. And if you don't have it, I suggest you sign up for it because I am a pattern, price, and time guy. That's I wrote a book on it. I studied Gann for a long time. This is my free commercial. And this is a major part of my pattern identification. I can find price, I can find time. Autochartist finds my pattern, so it makes my life a little bit easier. Anyway, cheers. Have a great year. And thank you.